Macros with Upasana Chachra, Chief India Economist with Morgan Stanley. Upasana, we're talking to you at a time when inflation is coming under control, GDP seems to be moving strong, rupee is stable, and bond yields are decent. So this is like a brilliant macro setup, what we've seen in a long, long time.
Yes, that's right. Macro setup has really, on trailing data is looking quite good. GDP data has surprised on the upside for the March quarter. Inflation has been coming down, and yes, macro management has helped to keep other variables like bond yields and rupee, as you mentioned, quite stable. Outlook for growth, though, would be a bit clouded because of the external demand, and for inflation, we would be looking for more deceleration or probably more steady prints, and therefore, i.e., a benign trend.
As we look into the next 2 quarters, which is the second half, do you think the upside momentum, what we saw in the Q4 GDP data, it could be Mahakumbh, it could be base effect, it could be normalization of government spending, will that snowball into strong recovery?
So our view is that, as I mentioned, that outlook remains a bit clouded because of the uncertainty from external demand. So yes, while we are entering into sort of a favorable base because of the low government spending and lower growth from last year in the same time period, taking into account that global growth is expected to slow, and Morgan Stanley's global economics team's forecast is for global growth to slow from 3.5% in quarter ending December 24 to 2.5% by the time we end the year, that's quarter ending December 25. That will have some repercussions on India's growth outlook as well. So we do expect some slowdown on the external demand and therefore exports, and that also does impact the domestic production and capex cycles, which historically we've seen tend to move in tandem, and therefore domestic demand will be the key driver, and the improved momentum in the March quarter coupled with some of the high frequency data that we've got for April and May, which have sort of sustained the momentum, does paint a good picture for domestic demand. But I think when we take into account the overall growth with both domestic and external demand, we're probably expecting growth to be a bit closer to the 6.2% numbers in the next few quarters, and therefore a bit weaker than where we saw March quarter ending.
Upasana, hi, morning. Good to have you on the show. Let's talk about where you see capex, both public as well as household capex, and then of course the government spend. And where do you think that's going to actually land up for the fiscal year ahead in the next few quarters, and how that's going to actually give a leg up to consumption?
So on the capex side, I think our view has been that for this year, government and household capex will be the key drivers or support to the overall capex line item. Private capex has seen, some segments see growth linked to infrastructure, government spending related or construction related segments, or PLI manufacturing, but it's not been very broad based. And if you again juxtapose the external demand outlook and the uncertainty that the changes in the trade and tariff policies have brought about, that do hamper the business sentiment, and as we've seen in the past cycles, again hamper the overall capex expansion plans. So in this year, or from a cyclical perspective, I think government capex spending and household capex is what we think will drive overall capex demand. Government capex has ended fiscal 25 on a strong note. So after remaining sort of weak on pretty much a large part of the last fiscal year due to election related disruptions, the last few months of the fiscal 25 saw a sharp a big catch up on government spending. If you look at the monthly momentum, the numbers picked up in March. Spending was close to INR 2.4 trillion. That has sort of maintained in April as well. April numbers have also been strong at above 1 trillion. I think it's 1.4. So I think government spending is catching up, and if likely to sustain this momentum, then at least they maintain the budgeted target growth rates, which is double-digit growth on a nominal basis, and that will help to sustain the overall capex environment. Even as private capex is probably not best poised in this environment of weaker external demand.
Upasana, what's the outlook on inflation? Do you sense that it's going to remain benign? The IMD has already forecast for an above normal monsoon, so I guess that should be taking care of food inflation quite a bit.
Yes, that's right. So I think again, inflation remains pretty benign. We've seen trailing data surprise on the downside on this calendar year. If you were to see, average is around 3.6%. Food inflation has been rapidly decelerating, helped by the good monsoon rains in the last year, which has helped improve crop production both for summer and winter crop. And that is likely to continue for this year as well. As you rightly pointed out, IMD is forecasting an above normal monsoon again. So back-to-back good monsoons is good for crop production, and that is improving the outlook for food inflation. At the same time, on the non-food side as well, there aren't any major upside risks that we can see or are worried about, and therefore overall trend for inflation does remain benign. I think we'll be seeing numbers in this range of around 3.5% for the next few months, so pretty much decisively below 4% for calendar year 25. And I think if you have to look at the balance of risks, then probably risks to the inflation outlook are skewed to the downside, and you're in a period of pretty benign inflation readings, at least in the next few months.
Given how both the domestic as well as the external factors, Upasana, are playing out, how do you think the policy response is going to be?
So, looking at the domestic growth and inflation trailing data, and also the outlook on the monetary policy side, we do have the view that it will remain decisively on the easing side. We've already seen RBI, take those steps, change of stance to accommodative cut. Two rate cuts have already come through. RBI has added a lot of durable liquidity in the system, and I think that will continue. So, with the inflation outlook remaining benign, as I mentioned, you'll see readings closer to say 3.5% in the next few months. And even if you look at 1 year forward inflation forecast, they'll be pretty close to 4%. So RBI will be comfortable that inflation is durably aligning with its medium-term target of 4%. That by itself will allow RBI to lower rates, and also the outlook for growth. While yes, trailing data has been stronger than anticipated in the March quarter, I think when you look at the outlook, you have to take into account that the external environment is not as strong, and it is clouded with uncertainty, and therefore other metrics of domestic growth like credit demand have weakened over the last few months, and therefore in this environment of global growth, domestic growth improving, but probably still a bit cautious in terms of outlook, and inflation decisively easing, RBI will continue with its easing path. So we do expect 2 more rate cuts. One would be later this week as RBI meets for the monetary policy, and the next should be in August. And we think overall easing bias across rates, liquidity, and to an extent on the regulatory side should continue.
So, Upasana, are you reworking your growth forecast? Where do you think we're going to close the year with?
So no changes to our growth forecast right now. We are expecting growth to be at 6.2% in fiscal 26 on an average basis. So I think we remain a bit cautious on the outlook or the path ahead, mainly driven by the risks that we see from external demand slowing and the repercussions that it may have on India's growth trajectory. But having said that, I think on a relative basis, the 6.2% that India is poised to post is likely to be one of the best growth markets that you'll see across economies, and probably the delta in terms of growth rate cuts or forecast cuts that have happened even post all these disruptions on the trade tariff side, the reduction for India's growth outlook versus say 6 months back is also one of the least. So I think on a relative basis, the India story looks pretty good, and macro management is only improving the dynamics and the foundations of that.
Right, Upasana, so good having you on the show today. Thanks for your time and have a great conference.
Thank you.
Okay, let's move on and let's talk about.
If you like this video, then like, share and subscribe to ET Now.